We answer your materials for business combination for SMEs. Problem 1. So question is the amount of goodwill to be recognized resulting from the combination assuming Philips Company is an SME. So take note ng sinosolve natin ay SME. So purchase method, NCI is measured proportionately. Your direct costs are to be capitalized. Okay. Philips Company acquired 60% of Sony on January 1 when the stockholders' equity of Sony consisted of ordinary shares 800,000, paid in capital 300,000, and retained earnings 600,000. Philips paid 1,200,000 for the interest acquired plus 10,000 for cost directly attributable. So direct cost of 10,000 capitalized and 20,000 for indirect. So your 20,000 is expense. Sony Company's carrying value of net asset is equal to their fair market values. So walang adjustment ang ating carrying value. So kunin natin magkano yung total ng ating carrying value. So 800, 300, and 600. So that will be 1,700,000 for the carrying value of the net assets of Sony Company. So we compute now. This is SME, so we always start with the cost of the investment. And the cost of the investment is the sum of your consideration transferred. In this case, the payment of 1,200,000 and your direct costs 10,000 only. If asked magkano ang ating cost of investment, answer is 1,210,000. I proceed with your NCI. So from cost ng 60%, meron tayo ngayong 40% NCI measured proportionately, which will be based on the fair value of the net assets ni Sony. So fair value equals carrying value. So I copy here 1,700,000. Kunin ko ngayon yung 40%. Magkano ngayon ang 40% ng 1,700,000? That will be 680,000, which gives us now your goodwill at the date of acquisition. So make sure na ilagay na natin yung date of acquisition kasi from mula sa ating class next week. So subsequent to date of acquisition, mababago na ngayon yung amount natin ng goodwill. So kailangan malinaw kung nagko-compute ka sa ang goodwill yan. Goodwill ba yan at date of acquisition? Goodwill ba yan at year end? So kailangan din natin siya i-clear. So from here, magkano ngayon ang ating goodwill? 1,200,000 plus 10,000 plus 680 minus 1,700,000. Your goodwill at the date of acquisition is 190,000. For problem number 2, the only question is the capitalized cost of investment. So again, we check the sum of your consideration transferred plus direct costs to be capitalized. So P Company and SME issued 120,000 shares of 25 peso par value ordinary shares for all the outstanding stock of S Company in business consummated on July 1, 2005. P Company's ordinary shares were selling at 40 per share. So we need your fair value of the shares. Magkano ang total shares issued natin? Ilan? That is 120. Fair value is 40. That is your consideration transferred. Book value of S, irrelevant data since hanggang capitalized cost lang ang kailangan natin. Out-of-pocket cost of combination were as follows. We identify now the classification of the cost incurred by your acquirer. We have legal fees for the business combination at 12,000, so that is direct. Okay, underline natin yung 12,000. Printing cost for stock certification, I have to cross this out. Share issue cost, sir. Finder's fees, 27,000 is direct. And CPA audit fees, check mo para saan yung CPA audit fees for business combination, which makes it now a direct cost. Because the last time we solved for SME, I'm not sure anong problem sa book. Your CPA audit fees is charged to share issue cost. No? We check the origin para saan ba yung audit fees, CPA audit fees. Nagkataon sa problem na yon, related siya for the issuance of share, which makes your CPA audit fees a share issue cost. But for problem number 2, this is now direct cost since the source is for affecting the business combination, which makes it now your direct cost. So contingent consideration. So on top of our issuance of equity share, meron din tayong contingent consideration probable and can be reasonably estimated amounted to 18,200. So your cost of business combination will be the sum of your consideration transferred, 1, issuance of equity shares, and contingent consideration plus yung tatlo nating na-identify na direct cost. So initially, we have 120,000 shares at 40. That will be 4,800,000. Magkano ating contingent consideration? 18,200. We identify three direct costs. We have legal fees, 12,000. We have finder's fees, 27,000. And audit fees na 19,000. So this is the capitalized cost of investment in S. Total is 4,876,200. Problem number 3 questions are the following. Capitalized cost of acquiring fees net assets and the amount charged to business combination expenses. So for the first question, again, we need your consideration transferred plus direct cost. And for the business combination expenses, alam mo na ang hinahanap natin is indirect cost because that is the only classification of expense or cost na i-charge natin sa P&L. So, indirect cost ang hinahanap natin for the second question. So, first, hanapin natin yung cost of the business combination. On January 1, Pine issued 100,000 share of 100 peso par value ordinary shares for the net asset. So, this is merger. The market value of Pine's ordinary shares on January 16 was 116. So, we need your number of shares issued multiplied by the market value per share. So Pine paid a fee of 80,000 to the consultant to arrange this acquisition. Cost of registering and issuing the equity securities amounted to 40,000. No goodwill was involved in the purchase. The business combination is between two SMEs. So the first expense is consultant fee, which is a direct cost included sa cost ng investment. Meanwhile, the cost of registering and issuing the shares is a share issue cost. May answer ka na sa second question. Magkano ang business combination expenses mo? Answer natin 0. Since wala pong indirect cost na ibinigay sa problem number 3. Computing natin ngayon yung cost of business combination. So your consideration transferred, you issue 100,000 at 116. That will be 11,600,000. The only direct cost identified is your consultant fee for 80,000, which makes your answer cost of investment at 11,680,000 for the cost of investment. Your business combination expenses, none or 0. Problem number 4 questions are the following. Amount of goodwill or gain resulting from the business combination, and number 2, retained earnings immediately after the business combination. So for question number 2, anong ina-anticipate nating data? So kailangan mo, sir, Conso RE at the date of acquisition. So mula po sa retained earnings beginning mo, we need to check kung may gain tayo at the date of acquisition because we're going to add sa balance ng RE. And also, sir, check tayo ng indirect cost because that is the only expense charged to P&L or retained earnings. So JL company is classified as SME. JL issued 120,000 share with a fair value of 2.8. So binigay sa atin yung total fair value. For the net assets of FG, JL company's retained earnings prior to business combination amounted to 500,000. JL incurred the following additional costs. So classify natin yung mga costs. No? So direct cost yung ating legal fees to arrange the business combination. Next one, accounting and consultancy fees is also a direct cost. Cost of printing and issuing stock certificate is a share issue cost. Indirect cost, okay, indirect cost. Finder's fees is also direct cost. So we identify 3 direct costs now. Okay. So immediately before the business combination, FG's assets and equities were as follows. So we need the fair value column, but sir, wala po tayo sa liability. So we assume that your book value equals fair value. So magkano ngayon ang fair value ng net asset ni FG? That is 1,200,300,000. Fair value of the net asset is 3 million. So dahil natin computin, sir, yung result of business combination from the cost of the business combination, consideration transferred to, sir, is 2,800,000. We add all the direct costs we identify. So unang-una, sir, we have legal fees. Your legal fees is 25,000. Your accountancy fees is 12,000. And your finder's fees, sir, na 23,000. That's the total of the cost of the investment. 100% acquisition, so I can deduct directly my fair value ng net assets, which is 3 million. So, mas malaki po yung ating fair value ng net assets ni acquiree, kaya meron tayong gain on bargain purchase. 28 plus 25 plus 12 plus 23 minus 3 million. Meron tayong gain, sir, na 140,000. I-add mo yan, sir, pag-compute mo ng conso RE. Mula sa RE beginning natin na 500,000, we add your computed gain on bargain purchase na 140,000. And lastly, meron po ba tayong indirect cost? The only cost to be deducted sa ating retained earnings? Yes. We have 20,000 indirect cost. Kaya ang ating conso RE at the date of acquisition is 620,000. Sir, paano kapag ginawa nating full PFRS? No? Kung full PFRS yan, you are going to compute the same amount of conso RE. Bakit? Unang-una, sir, mas lalaki yung gain natin. Bakit mas lalaki? Kasi wala tayong kakapitalize sa direct cost. Pangalawa, kung nadagdagan po yung gain natin, madagdagan din yung expense natin kasi hindi na lang po indirect yung isa-charge natin sa PNL. Also, the direct cost. So, check na natin with your cost, cost or consideration transferred na magkano, 2,800,000, sir. Diretso po tayo ng deduct ng fair value ng net assets na 3 million. So, we compute higher gain. Magkano ang gain natin? 200,000. Mula RE beginning na 500, sir. Okay? Add mo yung gain natin na 200,000. This time po, ang expense natin na ima-minus direct and indirect. So, legal fees na 25 plus accountancy fees na 12 plus indirect na 20 plus finder's fees na 23. Ang total charge to expense po ay 80. Kaya ang conso RE pa rin natin, sir, is 620,000. This is only true because na compute natin result ng business combination is a gain on bargain purchase. Pero kung goodwill yan, it won't result in the same answer. So that is for problem number 4. Problem number 5 questions are the following: the amount of goodwill to be recognized and your consolidated shareholders' equity sa ating balance sheet. Okay? So stockholders' equity section of PNS are given. So, compute na natin yung totals. Total for, this is carrying value, ha? Take note, carrying value ito. Magkano carrying value natin for P? That will be 2,300,000, sir. Okay, and for S, that will be 1,500,000. On this date, P Company issued 150,000 shares, 18 peso fair market value. So that is your consideration transferred for 80% of the outstanding shares of S Company, which gives us now 20% non-controlling interest. P Company paid 30,000 for printing and registering the new shares issued. So that is share issue cost, not capitalized. 25,000 for legal. Okay. Direct cost, 25,000 for CPA audit fees, direct cost, and 10,000 for miscellaneous direct costs is also a direct cost. On this date, as companies' identifiable assets and liabilities carrying values are equal to their fair market values except for inventories, which is 100,000 less than its carrying value. So, overvalued yung ating inventory. So, mula sa na-compute natin na CVNA or carrying value na 1.5, we deduct your overvalued inventories by 100,000. Kaya meron tayong fair value ng net assets at 1,400,000. We can now compute for the amount of goodwill on the date of acquisition, starting of course with the cost of business combination being the sum of your consideration transferred, the issuance of equity shares na 150 at 18. So that will be 2,700,000 plus yung ating direct costs. We identify 3. 25 plus 25 plus 10. That is 60,000. For the 80%, your 20% NCI, sir, measured proportionately will be based sa FVNA natin. Compute natin at 1,400,000. Kunin mo yung 20% NCI, that is 280. Magkano ngayon ang ating goodwill at the date of acquisition? 27 plus 60 plus 280 minus 14. Your goodwill on the date of acquisition is 1,640,000. Okay, for your stockholders' equity, so carrying value natin, sir, ni parent is 2,300,000. Ask yourself, what is the result of the business combination? Goodwill, sir. So, wala tayong i-add na gain. Also, we check the expenses. Okay? Ano lang ang expenses na ilulak natin? Sir, yung share issue cost lang, pero dun mo na siya ibawas sa consideration transferred. Wala po tayong indirect cost. So, unahin ko yung aking consideration transfer, the issuance of equity shares na 2.7, pero alisin natin, inet natin yung share issue cost na 30,000. So, we add 2,670,000. And lastly, anong i-add natin, sir? Do not forget to add your non-controlling interest. Huwag kakalimutan. Your non-controlling interest is a separate line item in the stockholders' equity section of your parent. So your NCI na 280, ayan. I-add natin yan to compute for your conso balance ng shareholders' equity. Total ngayon ng ating share is 5,250,000. Do not forget your NCI added sa ating consolidated shareholders equity. Mapa full, mapa SME.